if you don't have a plan, you become part of someone else's plan.
Should we buy? What should we do?
I think you should not.
You should not. You're not saying go start paying your gold chit in a nearby jewelry. No other instrument will give me that kind of a return.
It is only one time. See, irrational exuberance is not going to be always. So it is not a permanent status.
How do one choose which mutual fund to choose?
Hybrid fund would be a better. Choosing stocks is a tricky situation, not only for the individuals. You are trying to be a fund manager basically and not an investor. So you will not have liquidity for yourself basically. You don't have a plan. You become part of someone else's plan. Like, I think that is very important, that you actually have an understanding or become aware where do you stand.
Welcome back to the Life Grits conversation. We had covered a lot of very useful information in our first segment and the second segment. This segment is the much weighted segment where we are going to talk about the different investment tools that we have. And the hot topic, we'll start with that, which is gold, silver and copper. The prices are shooting up and people are like not knowing did they miss the bus or should they invest at least now because the prices are going up. Please recommend.
I think, commodities usually we typically have as a percentage of the portfolio.
Okay.
So basically, because if you look at gold and equities, they have a certain, mostly they have a negative correlation, which means that, if gold is going up, most likely equities are on the sideways or going down basically. So typically we had like commodities, I think until last 4-5 years back, we were actually, what you call, adding gold in our portfolio. Recently, from the time, there were silver ETFs introduced in India, that is, silver is also being part of our portfolio. Typically, some 15 to 20% of our any portfolios will have commodities basically.
Okay.
So that is something that we recommend our clients.
So even if they're starting right now, do you still say 15 to 20% should be the part of that?
No, it has to, I think, so if it is, say, for example, a systematic investing, basically it can go. And I think more, now it should be, I think, less of silver and more of gold. And also, you can increase it over a period of time. And it has to be in a systematic way. At this point in time, I think, as we discussed, the geopolitical factors is what causing the price rise, basically. So that is, I think, people run towards gold in any kind of uncertainty, basically.
And panic situation.
Yeah. So that is the thing. It is good to have gold in your portfolio. I think that will help to hedge your portfolios, basically.
Okay. So even if it is increasing, it's good to have a 20%. In case if you are investing also, should we wait or should...
So when I say 20%, it could be a combination of everything, and that can be, that can reduce or increase depending upon the prices, basically. So we typically rebalance. When you say rebalance, we book profits in one and push it to others, which is underperforming. So that is called as rebalancing, basically.
Okay.
So so it is not a standard formula, but you can actually have, it is good to have some kind of, for example, if you are doing SIP of some amount, it's good to have, say, a gold as part of it. Or gold index funds, there are fund of funds basically, which you can help to add to our portfolios.
But we should here take a beautiful takeaway that you're not saying go start paying your gold chit in a nearby jewelry.
No, I think that is not something that you should be doing. Ultimately, you'll end up buying gold jewelry only.
Yeah. So that is not a investment. When we speaking about investment in gold and silver, it is all about the paper gold, which is ETFs.
Yes, sir. See, what happens is, when you are investing in any product, it is important that which is a regulated product or not. Okay, so for example, if something happens, whom you are going to complain, right? So that is very important, basically. So in this case, say SEBI is the regulator in terms of, so it is any regulated product which it will help you, basically. So when I'm saying it is index funds or ETFs, basically, I'm not referring to digital gold, which is again not regulated by SEBI.
What is the difference, digital gold and the...
digital gold, they'll keep allotting some, say for example, they'll take the money and they will actually tell you this much is the gold that you have got.
Yeah, which just happens in every jewelry store, right? You pay every month and you get gold allotted to you. But end of the day, you can buy only from there.
Correct. But there are some platforms like, fintech startups which are actually selling you digital gold, which are not regulated by SEBI basically.
Should be cautious about.
Yeah, one should be cautious about that.
Okay. The copper, it has become the new gold.
Yeah.
Should we have this in our portfolio, or because today there is no ETFs also, so people are like hoarding because Instagram keeps selling 99.5% bar pure copper available. Should we buy? What should we do?
I think you should not.
You should.
Yeah, so that is a simple answer. Basically, they have certain correlation with copper, also has certain correlation with silver.
Correct.
Okay, so that is why it keeps going up basically. But again, like say after you buy, whom do you go, who are going to sell to basically? That is, yeah. So that is something that is not recommended. And also, like say for example, once this settles, basically, then it will crash.
But don't you think the once it settles, this word has been there from 1920s and 30s, no? India is not settling down.
No, so there are many times when the silver prices crash. No, there are many times when copper prices has crashed, including gold. I think corrected. So it is not going to be a linear one side up. Basically, it is going to correct. And only thing is, it is when matter of when. So having to said that basically, if you want to invest in copper, you cannot definitely do in India because there is no ETFs of copper. Of course, there are like say what you call some ETFs which actually give exposure to companies which trade in copper or like say like Hindustan Copper, etc. So that is where you can invest. But I think the better way, for example, for our clients, we usually go via the US route. So we take copper ETFs from there, and they can actually raise it because the HNI portfolios usually have geographical diversification as well. So do the Indian portfolios basically because we do take when I'm talking about like say some 15 to 20% of exposure in commodities. They also, let's say, we take exposure to geography diversification.
Okay.
So typically, it will be like at least, like say, 10-15% in other geographies. It could be US, Europe, etc. So that also gives an edge against the currency that usually which rupees is depreciating. So that way, I think diversification will help us to probably protect the downside and actually optimize your portfolios basically.
Oh, this it's a clear information from you. Like, just hold. Don't just jump and.
Yeah, so not buying the physical copper is like okay, so you can keep it in your showcase, and then
That's not the purpose. People wanted to make quick money. Like
ah,
they are saying today, for example, while we shoot, if it is 2,000 rupees in 1 year, if it becomes 4,000 in 1 year, I'm making it double my money. 1 lakh will become 2 lakh, 10 lakh will become 20 lakh. No other instrument will give me that kind of a return.
right. It is only one time. See, irrational exuberance is not going to be always. So it is not a permanent status. Sometimes it will become irrational. Then also then you cannot be a part of it.
True. So let's come back to the normal, regular, long-term investments. What are the different tools that will be appropriate for maybe young earners, low-income families, or even HNIs or middle-class upcoming families? What are the different tools they should at least start after watching this segment? They should at least start reading about these things. What are the different tools?
I think mutual fund is one good vehicle which can give exposure to all these four asset classes that I spoke about. We spoke about like equities, fixed income, or commodities, like say, and even like say infrastructure or real estate. So all those what you call asset classes, you can actually take exposure via mutual funds, and there are also ETFs basically. So, but I think
Come to mutual funds itself, there are too many mutual funds where they have, and there are HDFC is giving, ICICI is giving, everybody are having. So how do one choose which
see, if you are a beginner, I think you can actually look at, and looking at hybrid fund would be a better fund basically because which has both equity and fixed income in that. I think that is hybrid funds or like if you're a beginner, that would be a good place to start.
Okay.
Okay, so that way where the fund manager will be doing the rebalancing, you will not worry much about the composition of the fund basically. I think there are many fund houses reputed which are actually offering that hybrid fund house. Then you can choose any one of them and probably get started.
So for a young learner in a very young working family, they can choose this hybrid.
Yeah.
In the meantime, they can learn and then start taking higher, better
Yes.
funds where there are higher risk and better returns.
Yes.
Okay. So mutual fund is something definitely people should start learning about.
Yeah, I think if you're not taking exposure to mutual fund, I think you will be missing an opportunity to create wealth over a period of time. I think that is something that you should do. Of course, let's say I think India, it is very like say what you call regulated product basically, and that is something that I mean you can actually leverage to create wealth. I would say.
Okay. How about also buying independent company shares?
Yeah, I think that's also like say one of the things that you can do. I mean, but again, let's say what happens is, I mean, initially you might not have that much what you call expertise. I mean, to choose the companies, then actually track it, and then so then when you're choosing.
Why not go for a blue chip company? That is also one thing, no?
But again, let's say if you're taking one company, your actually concentration risk will happen, right? So in case of mutual funds, there'll be 80 to 100 stocks. The fund manager is doing on behalf of you. That will be much easier, basically, not getting into that. Otherwise, if you, I mean, choosing stocks is it's a tricky situation, not only for the individuals, even for the fund managers, it is a difficult situation.
Okay. Okay.
So that is not, you're trying to be a fund manager, basically,
Yes.
and not an investor. So if you're an investor, they better like leave the job to a, like say what you call expert, or like say choose a passive fund where you are investing in an index fund basically, which is tracking the index, or like say you can also choose an active fund which is actually I mean, managed by fund managers, etc. That will actually help you to like what you call, I mean, get not get into a situation where you will have to like, do the research and then buy the stock. But of course, let's say young earners will get, I mean, that kind of they want to be adventurous a little bit, and then for them it makes sense that you can do that, but that will also help you to understand how the market works, and it will also be a learning. But I think you can allocate some budget, and then you will also evolve as an individual. So that I mean, from like say starting from I don't know what I don't know to I know what I don't know. That journey will be like I think interesting.
Yeah.
That is what I would recommend.
Okay. For anyone, the first home is an emotion, so that we will not consider as investment, which we covered in the other segment. But investment in real estate, is it again advisable to be part of the portfolio? Is it a good tool for my money to grow and wealth creation?
Of course, like say, I think real estate is also an asset class which actually help you create wealth, and it can definitely give you a return which is more than inflation.
More than inflation.
Uh,
But again, does it depend on location and so many other variables? Apartment versus site and independent homes.
Of course, an apartment might not be a good investment option basically, but a plot can be one, or a land can be one, or there are like REITs, INVITs basically, and there are also like say fractional commercial, like fractional commercial. There are some products which are regulated by SEBI basically, so that also like say can give exposure to real estate as an asset class. So having said that, I think if you look at Indians, most of their portfolios are real estate heavy. I think and if I look at anybody's net worth, much of it will be real estate only. I think that way, I mean, it is, I mean, you'll have to be cognizant of what is the kind of allocation that you have towards real estate as an asset class. Of course, we say we don't consider that your, I mean, personal asset or the lifestyle asset as an investment or a part of it, but it will definitely come under your net worth. But you should be like be aware, like say that I mean, you have much of real estate and it is not yielding much. Then you will also like say many a times what happens is like you will be asset rich and cash poor.
Asset rich and cash flow. Can you explain this, please?
Yeah. So basically, what happens is like say you have multiple properties, but and you'll have be paying multiple EMIs.
Yes.
So you will not have liquidity for yourself basically, and whatever like say for example you are getting rent in one property, and with the whatever surplus you have, you will buy one more property, and probably you will leave that all to the next generation, maybe.
Yeah, you wouldn't enjoy.
Yeah. So the unlocking of wealth, or like say I mean, see the wealth is what ability to do whatever you want to do.
Right.
Right. So that ability you will lose. I think that is where it is important to have a balance between liquidity and also like say stability.
Okay. For your clients or HNIs who are thing, how do you guide them to buy a real estate, or how do you decide where to invest?
So first of all, it is important to understand whether it's a lifestyle asset or an investment asset. So if it is an investment asset, it's purely an economical decision. So we'll look at like say what is the kind of like say what kind of product it is basically. So it is a plot or is it a like what we call or a house or what
Commercial building
or a
nowadays.
commercial building, or it could be a fractional commercial real estate or anything. So the merits of the products, like say we have to look at the cash flows, etc.
Okay.
And based on that, we will recommend what is worth going for it and not worth going for it. We also look at the trends in that particular area. We also, I mean, we have partnered with certain real estate, what you call experts or platforms, which will give us the, I mean, trends of the particular areas, etc.
Okay.
So that will help us to like share our insights on a particular property that they are looking at. And also nowadays, I think the trend is the short-term rentals, basically where they will put it on Airbnb or certain things. So that is also some of the cash flows that we do look at. So how is it working, and then whether it makes sense to, I mean, put our cash there or not.
The new gen solutions,
Yeah.
the Airbnb and things like, so that's also considered as part of investment.
Of course, so that is a part of an investment where we look at like leverage the short-term rentals basically. And
You were also saying that philanthropy is one big place that HNIs are thing, and equally they would also be investing in startups and things like that. Is that also come under the portfolio, and is it a good investment tool?
of course, it's not for everyone basically, because in terms of like what you call investing in startups or like investing in companies, there is a certain portion of money that we allocate, and of course the client should be able to take that risk basically, because investing in startups usually comes with like illiquidity, which means that, I mean, they might not be liquid enough, and like success is also, and probably 1 is to, I mean, in 10 one startup might succeed basically. So for that, I mean, we work with a few accelerators who actually evaluate, and we also do evaluate the company whether it is worth putting or not. And of course, I think it depends upon the individual whether he can take that, I mean, kind of risk or not. Of course, let's say we are asset class and product agnostic, which means that, I mean, we can evaluate any product on any geography as well.
Okay.
And it could be any product basically. For us, whether it fits the client or not is very important. So it is more about the client centric approach rather than the product centric approach.
Okay. What are the generic other tools, investment places people should start reading up? Like all these things are like, we spoke about gold, silver, copper, and then mutual funds is a very big thing. What are the other tools they should be aware of and experiment?
You mean to say products basically?
Products or for whatever you name it.
I think so. If you look at, I think direct stocks or equities, I think we covered.
Yes.
Of course, let's say you can look at, I think ETFs, exchange traded funds, basically,
Okay.
which is something that, I mean, they can look at. Apart from that, I think there are, like say, new age products, like say SIF basically. But again, like say, I think that still has to prove its like what you call worth. We have to wait and watch how it is going to work basically. But otherwise, for a what you call a middle class individual, I think mutual funds, index funds, and ETFs, I think that should actually be enough, so that, I mean, to keep it simple and not to complicate. I
But
mean,
when the same thing goes to a HNI, what?
yeah. So in that case, like so that story is little different basically. I think we might look at various alternative assets basically. It could be like,
How different it is from a middle class portfolio to the HNI portfolio?
so that it actually becomes more complex.
The HNI.
Yeah. So because the number of like what you call kind of asset classes also will increase, and also geographies also will increase.
Okay.
So
But basic fundamentals are going to be the same.
yeah. So the asset classes remain the same, but there could be some exotic asset classes like
What are those?
cryptos. It could be cryptos also.
Okay.
It could be like even like antiques or even watches.
Art.
Art also, like that.
Oh, they become investment classes, is it?
Yeah.
Asset classes. Watches.
Yeah.
Oh, brilliant. So when people buy a Longines or a Rolex, it is also like a jewelry. You wear it and then it is also
appreciating. But you should look at, I mean, what is the kind of thing that you are buying. So it actually, like, I mean, of course, for everything you have to have that experts. So that was they will have to evaluate.
you can guide and evaluate for
Yeah. So we will not be able to evaluate the. I mean, yes, if you ask me this, and we actually work with people who actually have expertise in that area.
Oh, okay. Okay, so we have kind of covered all the target groups and people who will be benefited out of this. Any parting words when for all of them or for each of them?
I think see, I would always tell that if you don't have a plan, you become part of someone else's plan. Like, I think that is very important, that you actually have an understanding or become aware where do you stand and where do you want to reach.
Where do you want to reach?
Yeah. So then you will know the gap and then you'll have a path in mind. So that, becoming aware, where do you stand? Is I think it will be an inflection point for most of us when we look at, like, where do you stand, where do you want to reach, basically. And the path, at least the path you can actually find out some way. Uh, I think that
And
is
when
very,
this finance thing is sorted with this kind of a clarity, peace is already there, no?
yeah.
That is what you would have seen in your experiences.
Yeah, I think the knowing that, that we will be able to reach here, and that knowing that, there is a high probability that we'll be able to achieve our goals. I think that will definitely give one satisfaction, or kind of like what you call sleep. You will be able to sleep well at night, I would say.
Wonderful. Usually, finance is something, even when you turn on the channels, it's like lot of things happening. It is overwhelming, but we really appreciate and thank you so much for your calm and very assuring advices and guidance, and always pointing towards goal based investing. That's our key takeaway for me and the community. Thank you so much, Kishore. Thank you for these segments. And we sure hope to have you again on specific deep dive subjects.
Sure, sure. I think it was pleasure joining you, Krithika, and I'm sure like you're doing a great job, and I keep watching your work. I'm sure like you will go great heights.
Right. Thank you so much. It's a blessing. Thank you so much, Kishore. Thank you.
Thank you, thank you.